Hi, I'm Scott Williamson, Managing Director of Blackstone Minerals. We're looking to restart the Ta Khoa Nickel Sulphide District in northern Vietnam, and we're moving this mine back into production, but into a downstream refining business for the precursor product for the lithium-ion battery industry. So you can see here we have a nickel sulphide district, number of untested targets, 25 massive sulphide vein targets. This is a previously operating mine in northern Vietnam. The previous owners sunk $136 million. We're looking to turn on the existing concentrator. We're also looking to put in a second large-scale concentrator. Then we're moving that into a downstream refining business. So we're looking to build a downstream nickel refinery, and we're looking to produce the precursor product for the lithium-ion battery. This is a scalable and modular approach. We can take concentrate from our mine in the Ta Khoa project. We can also take third-party feed from around the world, and we can upgrade it into that downstream product, which is the NCM 811 precursor. You can see there's a movement towards high nickel cathode, driven by the significant demand coming from the lithium-ion battery industry. You can see on the chart, by 2030, the dominant chemistry will be the 811 NCM, so nickel cobalt manganese ratio of 811. So there's a movement towards a high nickel cathode for long range and luxury vehicles. Well funded with $14 million at the end of the last quarter. We're looking at around $12 million at the end of this quarter coming. Well positioned with some supportive shareholders in Deutsche Balaton out of Germany, EcoPro, which is the largest cathode manufacturer in the world, situated in South Korea. We also have introduced Fidelity, a large institutional investor recently. Board management have a strong position of 12%. We have Mr. Jung, who's the representative of EcoPro on the board. We've recently introduced Miss Alison Gaines, who's a corporate governance expert. We've got Hamish, Andrew, and myself, who are mining executives that were from the early days of the company. We originally started as cobalt explorers, and now we moved into this nickel mine and refining business, thanks to our partners, EcoPro, who moved us towards this opportunity and the opportunity to move into nickel. You can see we've got the upstream business. We own 90% of the Ta Khoa Nickel Sulphide Project, which is the previously operating Ban Phuc nickel mine. We also have our third-party feed partner, Trafigura, who is looking to feed significant amount of nickel concentrate into that downstream business. So we have a strong partnership with Trafigura, one of the largest nickel trading houses in the world. We have a number of opportunities for downstream partners in that downstream business. So we're going to take nickel concentrate from our mine, but also from third-party feed providers from Australia, Canada, Africa, South America, feed into this downstream business in northern Vietnam. From the upstream, we're aggressively drilling out our first 5 ore bodies. We have different types of ore bodies. We have massive sulphide veins, as well as disseminated nickel sulphide, large open pit mines. So we have a number of different types of ore bodies that we're drilling out. From those first 5 of those 25 targets, it looks like we've got 2 open pit mines and 3 underground mines, and we'll move that into a pre-feasibility study later in the year, then moving into the definitive feasibility study, turning on the existing concentrator and feeding that into our downstream business in 2024. You can see this is our nickel sulphide district. We believe that this is a world-class nickel sulphide district. We have over 25 targets. With first 5, you can see there highlighted. King Snake, Ban Chang, and Ta Kung are high-grade underground massive sulphide mines. Ban Phuc and Ban Khoa are large-scale bulk open pit disseminated nickel sulphide open pit mines. You can see we've got a number of other targets to test. We believe we'll be mining here for the next 10 to 20 years. This is the Ban Phuc ore body, which we did a scoping study on about 12 months ago. We have around 300,000 tonnes of nickel in that large bulks open pit mining opportunity. So we have low strip ratio, open pit mining. We have strong credits in those platinum, palladium, gold, rhodium, as well as copper and cobalt. So this will be the baseload feed for the upstream concentrator. We will need a second concentrator for this large ore body. We're looking at around about a 6 million tonne per annum concentrator for Ban Phuc. We also have these high-grade, narrow, massive sulfide veins. They're most likely underground mines. This is the Ban Chang opportunity. We have the east and west Ban Chang. Very strong byproduct credits, up to 1 gram per tonne in the platinum plus palladium plus gold. Strong copper, up to 1% copper, and up to around 2% nickel. So there's a number of these opportunities which we're drilling out. Very similar is King Snake and Ta Kung. This one is Ban Chang. So it looks like we've got 3 of these underground opportunities and 2 open pit opportunities like Ban Phuc previously. We've recently announced a pre-feasibility study for the downstream business. We're now moving into the pilot plant phase and the definitive feasibility study phase. That's an important phase where we bring in our feedstock partners like Trafigura, but also our downstream partners like EcoPro. We work very closely with those downstream partners, which are the major players in the lithium-ion battery industry, to get the right chemistry mix. We then look to offtakes, joint ventures, and final investment decision with some debt from our recently announced Korean Development Bank as our debt advisor. So that's a really important phase over the next 12 months, is working closely with our downstream partners to lock in those partnerships. We believe that a lot of the capital will be put up from our downstream partners. We'll then move into the detailed engineering and construction phase, and then delivering that NCM 811 product in 2024. You can see these are the high-level numbers from the pre-feasibility study phase. This is a globally significant downstream refining business, $2 billion NPV at conservative pricing for a $491 million capex, strong IRR of 67%. So very strong return on investment. We're looking to be within the top 5 Class 1 nickel producers in the world. And well positioned in this northern Vietnam region, on the doorstep of all the major players in the region, being South Korea, Japan, and China. So for our downstream business, we have 2 types of ore body coming from our Ta Khoa district. We've got Ban Phuc disseminated, and we've got the Ban Khoa disseminated. We've also got the massive sulfide veins. We're looking to bring in third-party feed from Trafigura and other third-party feed providers. So other nickel miners with concentrators or looking to build concentrators, we'll be talking to them as our third-party feed providers as well. So well positioned in northern Vietnam, we're looking to leverage off what we believe will be an emerging hub for the lithium-ion battery industry and the electric vehicle space. We're a local conglomerate, the VIN Group, is looking to build electric vehicles and electric scooters at the Haiphong port. That's the VinFast, a major mover in this space, and basically Vietnam's answer to Tesla. They're looking at an IPO on the NASDAQ around $60 billion. So we're well positioned in this northern Vietnam region, which with 2 of the largest hydropower plants in Southeast Asia right on our doorstep. You can see we're looking to be well positioned in that top 5 around the same scale as Glencore and BHP. So we're looking to be a major player in the downstream refining business, and well positioned with our peers. Our large peers in this space have tired and dirty infrastructure. Their infrastructure is set up for the stainless steel industry. We have the ability to set up this green product. You can see we're looking for, we believe, what will be one of the cleanest and greenest products in the market, because our flow sheet is better suited and tailored for the chemical products for the lithium-ion battery. We're looking to electric equipment, vertically integrated, but most importantly, the hydro renewable power and the sulfide nickel is, we believe, will produce some of the cleanest and greenest in the industry. So very well positioned with our mine, but also the ability to purchase third-party feed. So we can purchase nickel concentrate in the order of 75% payability, we can convert it into the NCM 811 product, which trades at 120 to 140% payability. So we can, by adding cobalt and manganese at a ratio of 811, we can produce this first stage of the lithium-ion battery, which is the NCM 811 precursor, which trades at a 20 to 40% premium to the nickel metal price. You can see here, this is the recorded price of NCM 811 since it has been a product. And you can see it's trading between 20 and 40% out. We've used a conservative 20% base case premium, which is driving the $2 billion NPV. Because of our strong margins, due to our renewable power and our competitive labor costs, combined with that strong margin for the NCM 811 product, with the ability to pay a little bit extra for our nickel concentrate, so we can pay 5 or 10% above market rate. And this is why we believe we could be a strong competitor to those larger players in the industry, because we have the infrastructure that will be better suited for this chemical product. It'll be using renewable power and competitive labor costs. We believe that we can drive strong revenues by paying a little bit extra for our nickel concentrate. At today's pricing, we're looking at a $3.5 billion NPV at today's premium for the NCM 811 precursor product. The next 12 months are very important as we de-risk this project. We move this towards a build phase and an operating nickel mine and refining business over the next 12 to 18 months. So we're working on that pilot plant phase, the definitive feasibility study phase, moving into that final investment decision over the next 12 to 18 months, continuing to drill out those number of ore bodies. So we've got another 20 targets to test, well positioned with the drill bit. Also, we're looking to a upstream PFS later in the calendar year. So many milestones over the next 12 to 18 months, moving this mine back into production and building a globally significant downstream refining business. Thank you for your time, and look forward to discussing any questions that we have during the one-on-one sessions. Thank you.